The market got annihilated today with the SPY down just under 3%, closing at 586.28. Of course, we're bouncing just slightly here in after hours. And this is after Powell stated that the Fed was going to be cautious in its rate cuts going forward. And so apparently that freaked the market out. But as we mentioned in yesterday's video, we were coming to what was a very crucial inflection point, both from a VIX expiration standpoint and from this FOMC. And of course, the run up has been massive. And so breaking multiple trends and multiple time frames. And when we look at the GEX picture, the 560 has all of a sudden popped out. And of course, gamma is growing at these lower strikes. We flipped into negative gamma exposure territory. However, I will note that we did come into what was previous support and resistance. We mentioned this again in multiple videos at this 585 level on the SPY, 5850 on the S&P 500 was a crucial zone. This was previous resistance on the initial rally into October, and then we broke out through this level after the election, and then since then it has served as support, and here we are today right back at that level. I suspect there's a lot of zero DTE being played here in the options market, so we'll have to take a look first thing in the morning and see what the gamma exposure is telling us. But when we contrast that with the S&P 500 itself, it's not quite as negative as is on the SPY, and in fact we saw quite a bit of volume coming back in here again at the 6100 strike, over 150,000 contracts, something to keep your eye on in the coming weeks in case we do bounce. We actually are reaching the lower dealer cluster zone on the S&P 500, which is why I say it's not as bearish as the SPY. We do see the same support level here just below 5,900. And while we do see some negative GEX between 57 and 5,800, we still have quite a bit of positive GEX basically between 6,000 and 6,200. So it's going to be a little bit of a battle, I think, in this zone just below the 5,900 level. It's going to be interesting to see how this plays out tomorrow and into Friday.
Anthony, one thing I wanted to point out regarding the NASDAQ is that, we had pointed out the divergence between the S&P and the NASDAQ in recent days, as well as the Dow and IWM, and how far above the upper Keltner channel the NASDAQ had reached, and how that was typically not a sustainable situation. And of course, today in one candle, we basically dropped to this middle Keltner channel. So quite a spectacular drop. But, I just wanted to point out that we did have several overbought signals and divergences. And one of those divergences that I want to look at right now involved the VIX. The VIX gave us several days of increasing, as you can see, starting back Thursday a week ago. We started seeing the VIX increase even though the market was still going up. And here we had this huge spike. So we're also above the dealer cluster zone that was around the 20 mark that we saw on the gamma dashboard for the VIX. And this gives us a little bit of context for where we might stop next. If I zoom out to the weekly chart, the Keltner channel is way up at 29.5 for the VIX, which would imply, one additional move to the upside. And a lot of times these things overshoot. We also saw a lot of volume at 30 and 40 on the VIX in terms of the option market just this week. And we highlighted that as well. But there were definitely warning signs, and we tried to highlight those here.
Yeah, thanks, Sean. The Q's down almost 4% today, and I want to switch over here to the IWM small caps down 4.5% today. Look at the candle here. Coming right into our lower dealer cluster zone. And this was actually support going all the way back to, if we just zoom out here, you can see this was going all the way back to July, this huge basically box that we were trading in, and we're right back at the bottom of this box here in our lower dealer cluster. It looks so small over here. And when we look at the volume in the options market for today, pretty wide dispersion of volume across all strikes that we see here on our visible chart. Gamma exposure concentrated currently between 220 and 225. That's right where we are. So this may actually see an oversold bounce here in the coming days. gamma exposure is not currently growing at these lower strikes. And so this could be an interesting spot for a short-term play in small caps after this tremendous sell-off. So something to keep your eye on there.
Let's take a quick look at Bitcoin, Anthony. We've been looking at that 110 level, and we didn't quite hit it. And we do see the Keltner channels on the ascent, as you can see on this chart here at 110 and change, and this one at 87.5. Today's decline almost got us to the middle Keltner channel, which is at 98.7. And we stopped just above 100,000. We're still above this middle Keltner channel. And let's take a quick look at the gamma picture, which shows that Bitcoin still has positive gamma. We have this very large gamma cluster at 100,000 with positive strikes at 105 and 110. And there's just not a lot of negative interest right here, at least on the visible chart that we have in front of us. So if we go up to the gamma levels chart, which I think better illustrates the dealer cluster zones, 110 is still up there. So this could change in the next couple of days, but we're almost to the zero gamma level. But, you know, when we have this much positive gamma at a certain level, that tends to be a pretty good indicator in past experience.
Thanks, Sean. Next, let's take a look at Tesla. Tesla, a huge hit today, down nearly 8%. I mean, just getting destroyed here. The market wanted 500 so bad, just couldn't quite get there, got really close. We thought, you know, hey, all this gamma exposure at the 500 strike, volume coming in at the 500 strike. But of course, with the caveat that VIX expiration and FOMC on Wednesday can throw a wrench into markets, and that's certainly what happened today. But despite the huge sell-off that we had today in Tesla, it's really just a blip on the overall trend, barely moving the needle if you think back to where we were just a couple of weeks ago in the lower 300 zone back in here. So this is what you could call a healthy correction. We'll see if this lower dealer cluster zone holds. We did have tremendous volume coming in today, 300,000 contracts traded at this 500 strike. So it's going to be interesting to see if Tesla can make another move back up to that 500 level. And actually, let's scroll down here to our 3D gamma surface model. And we can see basically if we zoom in, the GEX at the January 17th strike has really been growing. So obviously we had big GEX at the 500 strike expiring on December 20th. And that's something we've been watching for a number of weeks. But what is also growing is this GEX in the January 17th expiration, also at the 500 strike. And I think, you know, after seeing the big hit that Tesla took today, you know, this January 17th expiration may be a little bit more realistic to hit that 500 strike. So that's something we're going to be watching for in the coming weeks. It's going to take time to repair a lot of the damage that was done today across the market, and Tesla is going to be no exception. And we'll be continuing the conversation in our community Discord. If you guys haven't checked it out, I'll put a link in the description below. It's free to join, so be sure to take advantage of that. Also, head on over to geeksoffinance.com if you want access to our gamma exposure dashboard and our option flow analytics tools. I'll put a link in the description below for that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.